Hi, I'm Jerry. Today I want to talk about the close above the high of the low day and the close below the low of the high day price patterns. These are candlestick price patterns, but before we talk about them, I wanted to just discuss this chart of Caterpillar, 6-month chart of Caterpillar. So with those thoughts in mind, I'm going to zoom in, and before we talk about them, I just want to talk a little bit about trends. And in this particular scenario, we've got the red candle, which opened here at the top of this of the body, closed here, had a low day here, and the high and the low, the high and the open are still the same. So I seem to recall reading or hearing that an upward trend has higher highs and higher lows, and a downward trend has lower lows and lower highs. And what that actually means is, if you look at the candlestick, you find the high wick, if you will, that's the high. Well, in this case here, it equals the close. The high is there, the low is there, and if we compare the high of the red candle to the next red candle, we have got a lower high and a higher low. So it's not really an upward trend. But if we compare the green candle to the next guy, we've got its high is a higher high, and its low to the next low is a higher low. So that one qualifies. So here's a high to the next candle's high, which is a higher high, and the previous low is higher, so its low is a higher low. This one's a higher low. And if you look up the chain, you can see this is a higher high. This excuse me, this is a higher low, higher high, higher low. Pretty close. I guess it's slightly higher, pretty much neutral. So this is a higher high, and this is a lower. It's a lower low. It's a lower low, and up here it's a higher high, and it's a higher low. So if we follow this all the way up, you can see that at some point in here it kind of like tips over, starts to go down. Well, in the case of the close below the low of the high day, when that happens, what the scenario is goes something like, you find the scenario where you have a green candle followed by a red candle. You've got one here, green and red. Excuse me, yeah, you got a green and red. You don't have yeah, you have one right here, green and red, and green and red. So at this particular thing, you go back and you find of all the prior green candles, you go back and find the one with the highest high. Find the one that had the highest high. That's this candlestick right here. And then you find the low of the high day. And if the stock can close below the low of the high day, that's a significant candle. That means that this could be the start of a trend downwards. So here if we test that, we start up here. Obviously this is a high, and this is a lower high, and this is a low, and this is a lower low, and you can see it's lower high, lower low, lower high, lower low, pretty much still the same, slightly lower, and up here it's a higher low, lower high, lower low, lower high, lower low. You get the picture. So the significance of when this red dot actually showed up, which is going to be right there, that's the start of a new downtrend in the stock. So if we look a little farther down in the chart, we can find a scenario for looking in the other direction, we're just looking for the pattern of where we have a red candle followed by a green candle, and we test our same hypothesis. Is this potentially the start of a new trend? And if you look there and you say, well, if you look here in this whole sequence, you'll find that you're looking for the high of the low day. So in this particular case, the lowest day in the sequence is actually not this one. The lowest day is actually this one right here. So we went back all the way. So the question is, if we go from here, if we can close above that candle, then we will have a CAHOLD. And you can see that it didn't close there. It didn't close above there. It didn't close above there. Oops, we ran out of green candles. We got a red candle, and the process starts all over again. So if we're here, the high is there. There's the low. If we can close above the high of the low day, there's only one in that sequence. There's a CAHOLD right there. So I'm going to take this guy and I'm going to put a mark around him. Oops. There's a CAHOLD. And if we look at it, the other one. Okay, so I've gone and I expanded the chart, and here's the CAHOLD that we marked just now, and then prior to that, here's the close below the low of the high day. And if we go and turn on the studies to show that, you'll see that we've got a number of them that are out there. So let's turn on the CAHOLD, yes. Let's turn on the close below the high day, yes. And we'll turn on and we'll see we've got, sure enough, there's a red dot above this red candle, and there's a green dot just above this candle. So the thing that makes this significant, the thing that makes the close above the high to low, the thing that makes these patterns significant is the one that it's not subject to anybody's interpretation about what's going on. It's strictly speaking, it's the potential start of a new trend, or it could represent, in the case of a thing, it could represent a continuation of an existing trend. So here it is where this trend actually changed here from going down to going up, and here's a bounce off of it. It kept going up until it hit this guy and went back down. So you can see that generally speaking, we're following this thing. We also had it go through golden cross, the 10-day exponential actually cross through the 30-day simple moving average. But the beauty of this is that these are very fast. There's nothing faster on the chart for showing potential changes in trend than the actual price candlestick. I mean, it's going to always be faster. It'll be faster than the whole moving average. It'll be faster than the exponential moving average, and it'll be way faster than the simple moving average of just looking at the last 30 days. So you can see how long it's taken this guy to react and say, boom, this actually happened right there. And how long before it takes so you get a viable shift to the downside? It takes quite a long time. And even if you wait for the passage of the 10-day EMA crossing through the 30-day simple moving average for a death cross, in this case right here, or a golden cross right over here, it is significant. The other studies I like to look at are the white dots, which is, let's see, it's right here, same, not that one. It is under, I have these under the whole ribbons. So show the whole 15 reversal, check. Show the whole 10, 20 crossovers, check. And let's turn the ribbon on. and clutters up the chart quite a bit, but but the point is, this is what we were talking about. This is the white dot is the hole 15 reversal, and the maroon arrows represent the transition of the 10-day hull crossing through the 20-day hull. So these can happen, but the real deal for regards to a new trend beginning really comes down to the CAHOLD and the close below the low day. Now, if you look at these charts, and if you go back and look at the watch list, this is a watch list of basically all stocks that have a market forecast number that is not number 1. So number 3, or phase 3, means it's generally in a bullish situation. Phase 4 means it's still bullish, but it's reaching resistance. Phase 5 means it's degraded a little bit more, but the price is still holding up. Hasn't gone through the 30-day yet. And anyway, and phase 2, which I do not see any phase 2s, that would be the price just closing above that. So if you're looking for CAHOLDs, you'll find them over here in this column. They'll be an amber colored. If they're white, there's a CAHOLD right there that's just happened today. If you want to find it on this side, there'll be a CAHOLD right here, and it just happened today. And if you're looking for close below, it's really tough. It happened today. So those things kind of put you in mind. You have to kind of look at it and ask yourself, well, how much are we extended above the 30-day simple moving average, the 10-day exponential? What's the markets doing? What's the VIX doing? It's kind of like these will put you into that right mindset, but you kind of have to use other things to determine where are you at with regard to your price. Anyway, that's pretty much the generic rationalization of why the CAHOLDs and the close below the low of the high day candlestick patterns are so interesting. The price patterns also work for weekly charts as well. So we were just on a daily chart, so they don't really care. And if you're looking over here on this side, this is a CAHOLD pattern for this stock here. So it just happened on a weekly. Whoa, look at that guy. He took a massive jump up today. A massive jump up for the last week. He really popped. Any more that are in this? Oh, I'm sorry, it didn't happen today. Has to be in this camp right over here. Yep, another pop, another weekly pop for these guys. But so you can see the same kind of things happening with the little green dots and the little red dots on the charts as well. So these are weekly bars, and they might be more significant as well. That'll do it.